Well, folks, we are back at it again. Yes, this week, this Friday, I think 11 a.m. Eastern Time, we will have Jerome Powell giving his keynote presentation at something we call Jackson Hole. Jackson Hole is the event 2 years ago. 2 years ago, where Jerome Powell threw away his speech and gave a speech just short of 9 minutes. 2 years ago, he declared the Fed was going to battle inflation, that they were serious. Obviously, from there, you saw the Fed start to raise rates 75 basis points at a time. You saw the fastest increase in rates on record. And the Fed also said, or Jerome Powell said, he knew that this could bring pain. It also could bring higher unemployment. He also indicated in that speech 2 years ago that we will keep at it until we are confident the job is done. So folks, you got to remember that was 2 years ago. The Fed took rates from essentially 0 to essentially 5.5, about, in the fastest rate increase. And I just want to rewind the clock with you and kind of live through the events that transpired. I say this because when you really look back at it, the fact that we raised rates that quickly, frankly, didn't break a lot of things. What got broken? Well, we saw some banks like Silicon Valley Bank, First Republic, I think it was, and a few others who were either over-indexed on their risk profile on treasuries, on equities like tech stocks, or some other things. We didn't really see the cascading of regional bank failures. Maybe it is still coming. We have obviously seen extend and pretend, but we've seen some bank failures, but not many. Also, we have seen a depression level transactions. Right, we went from roughly 6 million to sub 4 million. I do believe later this week we will get a cycle low. We have seen transactions in commercial also break. We've seen mortgages break. We certainly saw pain. But when you step back and look at the macro level, unemployment, I think, went from a cycle low of 3.4 to a cycle high of 4.3 over 2 years. It wasn't quick. Maybe it's starting now. But again, I would argue that Jerome Powell is probably pretty happy with where he landed. Obviously, a recession hasn't been declared yet. I do think one is amongst us. But many people, myself included, have called for, I think this is my third recession call, and I've been wrong twice before. So take that with a grain of salt. But yeah, I think it will be very interesting this Friday. So what is going to happen this Friday? And I'm going to call this the hawk or the dove. And I want to hear from you. I would love to get your input, what you think happens Friday. Because I think Jerome Powell, I don't think he could play middle of the road. I think Jerome Powell will either be a hawk or a dove. Okay, what does that mean? Let's do a dove first. Because frankly, that's what the market wants. I think the market is pushing this idea of somewhere between 3 and 4 rate cuts this year. Obviously, with the first one starting in September. So will Jerome Powell come out and basically tee up a September rate cut? He would say things like inflation stays where it is or gets better. The unemployment market continues to weaken. Things like that. Will Jerome Powell be a dove? I have a sneaky suspicion he is going to be more hawkish. Now, why do I say that? Well, frankly, history. The market the last 2 years has been so far ahead of the Fed that Jerome Powell has repeatedly had to say, guys, you're not listening to me. Higher for longer. So, will Jerome Powell go into his Friday speech and say things like, we are not in a rush to cut? Will he give kind of a tough love speech, meaning, guys, not yet, but it's coming? Will he say things like the market's got it wrong? Again, remember in January, the market was calling for 7 rate cuts, and to date, we have 0. Will he talk about unemployment? Will he indicate he's watching it? Will he say things like 4.3% is higher than before, but still below full employment? Will he talk about the natural, or what is often called the neutral interest rate? Neutral interest rate, or R star, is said by the economic geeks, is this theoretical number where it is not stimulating or restrictive. It is not a number that you or I can calculate. It's very much an opinion. But again, will he talk about that? So at the end of the day, call it Friday lunchtime Pacific time, so maybe 3 o'clock Eastern. Will the market be celebrating the impending September rate cut, or will the market be in gyrations because they have to reprice to a November rate cut? I am sticking with my call of no cut in September, but a 50 in November. I think we will know a lot about that call on Friday. Do I have a chance? Am I just out to lunch? We shall see. So we got some earnings this morning that Estee Lauder lowers forecast. Estee Lauder obviously plays in the beauty category. Again, seeing a lot of weakness out of China and Asia. So again, very much the Chinese economy is still sputtering and frankly, not doing well. We got an acquisition. AMD is going to acquire server builder ZT. I will be honest, I never heard of them, but damn, $4.9 billion. Yep, $4.9 billion. Clearly, ZT is a company to be known, $4.9 billion. This is something I expect to go up. If we're in a kind of flat economy, not negative, not impressive growth, you will see companies, especially companies with high stock valuations, acquire growth. So I would expect more of these to come. Let's talk about the top 5 housing markets that have crashed. Yes, housing crash is often quoted. Thanks to Lance Lambert and Resi Club. He has an entire list of the top 20. I've only taken the top 5. You can go ahead and find his article at resiclubanalytics.com. This is a decline from the peak. So the peak was 2022 for reference. So roughly 2 years. In 2 years, Boise City, Idaho, down 9%. Punta Gorda, Florida, down 9.9%. Lake Charles, Louisiana, down 12.2%. New Orleans, down 13.1%. And the big winner, or I guess I should say the big loser, Austin, Texas, down 18.9%. Yes, 18.9%. You are getting dangerously close to 20%, which is where I put crash. 10% is a correction. 20% is a crash. Yes, pretty crazy. Folks, I want to give you a heads up about something really exciting that we worked on yesterday. I was able to interview 5 school members. These are newer investors that are just starting their journey. And you will see those videos come out over the next 5 days at 5 p.m. Basically, I wanted to interview some folks that are just getting started, right? You know that I talk to millionaires and multimillionaires every week, but you know what? We've been in the game a decade plus. I wanted to interview people that have been in the game a year, 2 or 3 years, and those videos are coming out 1 a day for the next 5 days. We talked to a W-2 employee with 3 kids under 3 who is already in 3 markets. Is that a good idea? I don't know. The video comes out tonight. We talked to a young man who is house hacking his first fourplex. We talked to a single parent who's still getting his money right. He's talking about saving upwards of 20% after getting his money right. Doesn't own a unit yet, but is doing the work. We talk a lot in that interview about what he could be doing. We talked about starting over. Yes, we interviewed someone who was hurt badly by the '08 crash, who has had to start over. And then finally, we talked to a young man just getting started today. So again, if you are in my school community, you can feel free to reach out to me directly. I would love to continue recording these because I think it is important to get the voices from the new investors, see what questions you have, all of that stuff. Next up, we got the uneducated economist. Yes, uneducated economist, frequent on this channel. He is out warning about lumber prices. Folks, think about this. Remember, we talked about the $25,000 first-time homebuyer credit yesterday. If we unleash some demand stimulus, just if we release demand stimulus into a world where there are lumber shortages, where there are curtailments at mills, you are going to see lumber skyrocket, just like last time. This is inflationary, folks. Supply and demand, supply and demand. If you unleash demand and there is no supply, you get shortages, you get bidding wars, you get inflation. Welcome to inflation. Looks like Reuters did a poll with economists, and the results were they expect 3 rate cuts this year, basically 25 basis points at each meeting, and no recession in 2024. Next up, we did get U.S. leading economic indicators. Today, they were slightly weaker than expected. They were down -0.6, where expectations were -0.4. There was a drop in new orders, weak consumer expectations, and softer building permits. So again, the economy, to me, seems to clearly be slowing down. And then finally, folks, if you are in school, I have a treat for you this week. You've got something to do every other day. Today, Casey from Brick by Brick Wealth, we're going live for your Q&A. On Wednesday, you will have Frank leading the accountability group. On Friday, you will get an opportunity to interact with Dion and Matt, the lumberjack. And then on Sunday, you've got a twofer. You've got Ty going early in the morning for creative financing, and you have Jared leading the second accountability group. Folks, if you are interested in getting started, you have to join school. It is the spot to be. And lastly, don't forget about the very important video today at noon. Today at noon Pacific, I am putting out perhaps the most important video I have ever done. I'll just leave that as a tease. I want to thank Fred for his time. I want to thank Fred for coming out to Vegas and being one of our featured speakers. Yes, you will get a chance to see what I believe is perhaps could be the most impactful session at our Vegas event in February. Folks, have a wonderful day. This is the Daily Financial News. We do it live 5 days a week. Take care of yourself. Like, subscribe, comment. We are now 61,000 strong. Yes, we crossed 61,000 subs yesterday. We are 39,000 short of 100K. And you know what? Just one day at a time. One day at a time. Take care, folks. Later.